In this video, we're going to be screening for alpha. I made 3 videos already. This will be part 4 to that series on stock screeners. We did one for moving averages, one for daily relative volume, and one for weekly relative volume. In this video, we'll be doing alpha, screening for alpha, and it'll be on a 3, 6, 9, and 12-month time period. So if that's something you're interested in and you want to know how to screen that, we'll get into it. But before we do, I would recommend watching those first 3 videos. If you haven't watched those first 3 videos, you should be able to do this off the daily relative volume tab. I'm going to be using the weekly relative volume tab, but it's really the same thing because we're just calculating performance for stocks versus the market here. All right, so you should have everything you see here with the headers in blue and all these columns. You should have a weekly relative volume tab if you've already been following along. It looks something like this. This is what we did in the last video. What you will need to do is add to this weekly relative volume tab. I want you to add these headers right here in these cells from W1 over to AE1. I want you to add in these 4 ETFs. You can add in more if you want. I wanted to show you that you can make alpha versus more than just the market. Any ETF, it's up to you what you choose to see. What we're looking at a stock and seeing how it's performed, what alpha it has versus whatever ETF we choose. So I have the 3 major indexes, but we could also look at it versus the quantum ETF. So you're going to need to put these 4, and you can add more if you want. We have a 91, 182, 273, and 365 day period. That is the 3, 6, 9, and 12-month period. There's 91.25 days in a 3-month period. So I have 91, then I multiplied it by 2 and then by 3. So for the last period here, we do have 92 days when we go to an extra day when we go to 365. If you want to keep it consistent, you can do 364. It doesn't really matter. It's pretty close to, a quarter, 2 quarters, 3 quarters, and a full year. Okay, so the first thing we'll do is we'll just highlight cell AA1. We'll go up to data. We'll go to data validation. We'll go to add a rule. We'll go to drop down from a range. We will select our data range by clicking this box. We will start to pull this down, and then we'll go into this box. Once we start pulling it down, just get rid of 7 in case we want to add more ETFs. This goes all the way down to AA. We'll click OK. Then we'll check our advanced options, make sure this says reject input, and you can select whatever you want here for display style. And we should be able to select an ETF now, and we do. So we have SPY we'll select. Then just click done. And while we have this open, we'll do the same thing for cell AE1. Highlight that cell, click add a rule, drop down from a range, click on our box to select the data range. We'll start pulling this down. If we want more than just the 4 periods we have later on, we can add to it. So we will subtract out that 7, so it goes all the way to the bottom, and then click OK. Advanced options, reject the input, and then you can select whatever display style, then just click done. And now we're done with that part. So we're just going to select 3 months for now. So we have a 3-month period. Next thing we'll do is we'll just go into current price right here. And this is the current price for whatever ETF we have selected in cell AC1. So just type in equals Google Finance, and we're going to select this cell for our ETF, comma, quotation, price. Close quotation, close parentheses. So that gives us the current price of the ETF we have selected. And then the next thing we are going to do is get our beta. So we're going to go into cell Y here, Y2, and we're just type in equals Google Finance. And then we are going to select our ticker, and then comma, quotations, beta. Close quotations, close parentheses, enter. And you'll just want to drag this all the way to the bottom. Sometimes you don't always get it for every stock for whatever reason, not really sure why. For whatever reason, we're not getting it for Constellation Energy. I'm not really sure why, but just make sure you drag that all the way down to the bottom. So I've gone ahead and I put the price from 3 months ago into cell W2 and into cell AB2. If we were to change this, it would go to 6 months ago, so we would get a different price here. So that's what the price was of NVIDIA per share 6 months ago, and that's what the price of SPY was 6 months ago per share. And whatever you change it to, that's what the price will be for that time frame. I'm just going to go ahead and highlight the cell. So I just want you to go ahead and put this formula in cell W2. Make sure you lock in AE1 with the dollar signs on both sides of AE, because we want to reference that all the way down. And I'll also double click here so you can go ahead and pause the video and put that in. I'll wait a second here, not too long. You just pause it and put that formula in, and then you're going to want to drag that all the way down. Now you're going to do the same thing for here. and you're just going to put this formula in cell AB2 for the price from 3 months ago for the SPY. So I have it up here in this address bar. You can copy it, or it's right here. I'll leave it there for about another second or two. And you just pause the video and put that formula in. You're not dragging that one down. It just stays right there. So now we need to get our return. So we'll do that for the ETF first. We have the current price and we have the price from 3 months ago. So we're just going to go into cell AD2 here and we're going to type in equals. We're going to grab our current price and subtract out our price from 3 months ago. We just want to put that in parentheses. And then we want to divide it by our price from 3 months ago. That's going to come in as a decimal. So you're just going to want to change that to a percentage. So the SPY has returned 5.62% over the last 91 days. And if we were to change that, to the Qs, we could see what their return. The Qs has returned 7.46% over the last 91 days. So the Qs has outperformed the SPY over the last 91 days. So the next thing we'll do is go to cell X1 or X2 here, and we're going to do the same thing for the ticker that we're looking at. We want to know the return versus the last 3 months. So it's going to be equals, and we're going to grab the share price, which should be in cell N2, minus the price from 3 months ago. And we're going to put that in parentheses. And then we're going to divide that by the price from 3 months ago to get our return. And same thing, this comes in as a decimal. So we just want to change that to highlight that and change it to a percentage. This one we do want to drag down, so you're going to want to drag this all the way to the bottom. So just grab this little corner and start dragging this all the way to the bottom so you get your return versus 3 months ago. Okay, so now I'm going to show you how to calculate the alpha. But before I do, I just want to clarify a couple things. It's going to depend. So you're going to see I have alpha selected for NVIDIA, so it's not good, right? It's negative 18% over the last 91 days. So over the last 3 months, it's a poor alpha versus the market. However, if we change this to 365, it has alpha on the market. If we go, so that's over the last year we have alpha on the market, but over the last 3 months we don't. It also will change based on what ETF you're comparing it to. So it's negative 18% over the last 3 months for the SPY, but for the Qs it is negative 21%. And if we were to select, the Dow Jones, that's also going to change. So it changes based on what ETF you're comparing it to. So keep that in mind. Now I'm going to show you, now beta is part of the calculation, but we still have beta separate, and I like to pull beta over so I can look for low beta stocks with higher alpha, but you don't want necessarily too high alpha. There's kind of a fine line there. So you have to figure out what that is for yourself, but let's go ahead and do this real quick. So we're going to do the calculation. Here's the calculation. It's right here in Z2 for NVIDIA. And what we're trying to do here is get a see what the risk-free rate of return is, if I can say that right. And right now, T-bills are 4.25%. So we could put our, for our 3-month T-bills, roughly 4.25%. They change day to day. We could put our money into a 3-month T-bill and collect an annualized rate of 4.25%, risk-free. So we want to find stocks that have alpha based on that number and based on the ETF, the market itself. So we're looking at the market and we're looking at the risk-free rate, and then we're trying to get alpha on those two things for the stocks that we're looking at. So right now, NVIDIA is not a good stock based on the last 3 months, but based on the last year it is. So here's how you calculate it. It's equals X2, which is the return for NVIDIA, minus the T-bill, which is 4.2, minus open parentheses, 4.25%, which is the T-bill, plus Y2, which is our beta, times open parentheses AD2, which is the return for our ETF we're looking at, minus 4.25%, close parentheses, which is the T-bill rate. So that's how you calculate alpha. And then you're just going to drag that all the way down. And the last thing we'll do once we drag this all the way down is just do a query, which we've done in past videos. So you can leave now if you want, but if you don't, if you want to know how to do it, we're going to do a query to show you how to pull this over and put it in descending order to find the highest alpha stocks. So we're going to make a new tab called alpha beta, or you can just call it alpha. I call it alpha beta because we're looking at alpha and high alpha and low beta stocks, So in J1 here, I would just put in equals, and we go back to our our vol tab, and we just want to get what period we're looking at. So if we're looking at the 30, so we know if it's the 10 week, 30 week, etc. So that's just going to be equals, and you want to grab O1 here. And the way we pull this over so we get it in descending order so we can see what has high alpha but low beta is we just go ahead and right here type in cell B1 equals query, open parentheses. Then we go back to our WR vol tab, and we're gonna grab everything from L all the way over to Z, all those columns. And then we're going to go back into our alpha beta tab, and then comma, quotation select. You want L, comma, M, comma, N, comma, Q, comma, Y, comma, Z. Now we want to order by Z descending, DESC, in quotations, comma, 1, close parentheses. So just copy that formula in cell B1. And you'll see like team right here. We have alpha over the last 3 months, and we have low beta. So this is a stock that looks interesting to me, right? Because it's Atlassian, and we are 46% above our 30-week moving average. So you may want to look for a stock that has low beta that's not so high. So Fortinet, that's 21% above our 30-week moving average, 22%, with only a beta of 1, and we have 21% of alpha. Now we could go, if we go back to our weekly relative volume and we change our time frame to, let's say, 6 months, that's going to change everything in our alpha tab to different. So now team has the highest alpha. Before it was the third highest. I think Tesla was the highest, and Marvell has high alpha. So team has the highest alpha over the last 6 months with a low beta. And then you have your moving average too. I mean, that's really all I got. That is just to show you how to calculate alpha and screen for alpha for stocks. And then you want to find stocks with higher alpha and low beta, but 101% might be too high alpha. You have to decide if that's too much. There could be a catalyst that made it go that high, and there could be mean reversion coming, or maybe it's just, money's coming into the stock. We use our other parameters too to decide whether or not to buy or sell this stock. I appreciate you watching. If you found any value in the video, consider hitting the like and subscribe button, and thanks again.